Hello, everyone. Today I would like to talk about explain what is drawdown and the pain index. Because I did a new tool in Excel. Here it is. Um, and I think it could be pretty interesting for some of you guys and investors. Is the tool is in Excel, as you can see, and when you open it, you just need to enable macros there at the top. Got some security warning. All right. I will do this presentation in two parts. The first one will be to explain roughly what is the drawdown and the pain index. And then I do a second part of this video to explain how you can use this tool um, to see how your stocks are compared to other stocks. Let's go first to the introduction. You can click on the intro tab here or there. Let's go to the top of the screen. So first of all, what is the pain index? Well, the pain index is something that will measure at the same time here the depth of the drawdown, so how far a stocks goes from its all-time high, how much it goes down, that's the depth. The duration, so how much time it needs to go back to the previous all-time high, and the frequency. So how many times the stock is going down every year, basically. So for example, this is a chart of the S&P where it is the drawdown chart. So all these blue lines here are the drawdowns, and the sum of all the drawdowns here is called the pain index. So for example, that's the S&P since 1979. Here you've got the 87 crash. Well, the first thing about the drawdown chart is here you don't see very much the crash in 87, but if you look at the drawdown here, so that's the return chart, and here you've got the drawdown chart, you clearly see the stock market crash in 87. So the drawdown chart has one main advantage is that it solves the scaling problem that you have when you look at long-term returns where you don't see the small dips here. And what it does, it's measuring, how deep did it go down from the previous top. It did come back. You got the 87 here crisis. Um, that's for the S&P. So very useful because on one chart, as it states above, you've got how frequently the stock is going, how long does it take to recover, and how deeply, how profound are some stocks going down. So this is the drawdown chart, and if you make the area here, the blue area is the pain index. And what I will do now in my tool in the second part of this video is to calculate on one part the total return and to divide that by the pain index to see for each stock how much return you get over period. You can do it over 1 year, 2 year, longer term. How much return you get per pain index, per unit of pain, what the tool will do. This tool has been very much inspired by this company here or this Zephyr pain index. You can just search that on the web and you will find a lot more explanation about it and how you could use it. Also very nice tables about different asset classes, what is the pain index for every asset class. All right. So in the second part of the video, I will try to explain now how to, in a nutshell, to kind of a ranking of some of the stocks per. So I will divide the return of the stock versus the pain ratio or versus the max pain ratio, which is the biggest drawdown that the stock has has had over some period of time. So video next. Thank you for listening.